Today we are going to take a look at Napco and see if it's a good buy or not. Napco was suggested by one of you, ODC's Focus 3044, who said take a look at NSSC. Thank you for the recommendation. Spoiler, I like the company very much and I think that it could be trading at an interesting price now. So I'll always welcome your feedback and let's not waste more time. In this video, I will analyze NNSC and you will have my 2 cents about the company. This is a security company in the US and this is a small company. The market cap is $1 billion. So we are not talking about a mega cap, large cap that is currently driving the whole S&P 500. We are talking about a small component here. And what do? Napco Security Technologies manufactures security products encompassing access control systems, door locking products, intrusion and fire alarm systems, and video surveillance products. Its products are used for various applications, which includes alarm systems like automatic communicators, combination control panel digital communicators, and digital keypad systems, fire alarms, etc. So we are deeply in the security of houses. This is purely commercial, so they don't do homes. That's the schools, municipalities, public servant houses, or these public commercial buildings. Okay. And if you look at the stock price, you said, okay, what is wrong about the stock? You have a lot of volatility, but frankly speaking, the stock is going up and to the right, so you know me, I like it. And if you look at the margins for this business, you see that you have some decent margins, gross margins. And what I will show you later in this video, you will love it, because you will see improved margins, and I will explain why. You have some decent net margins for a security company. That's nice. I mean, you can have some software companies that have this kind of margins, and the PE ratio is roughly 25 at the moment. So if you wanted to have some good opportunities in the market, maybe you could be interested in Napco. Okay, very well. Let me scroll down a little bit and show you the revenue growth, net income growth. If you look at the revenue in blue here, you see that it has always grown and now the growth has accelerated since 2021. What happened over there? If you look at the net income growth, that's the same thing. The growth accelerated recently. What happened there? The company has almost no debt, and since 2020, 2021, it accumulated more cash and more cash and more cash. So the company is becoming more healthy with a better balance sheet. And the same thing with the free cash flow. You follow the same pattern. It fluctuates a little bit more because of capex, but same thing, improving drastically over the most recent years. Same thing with the return on invested capital. So the business is becoming more and more efficient. They don't do much buybacks. They don't do much dilutions. What is happening? And I think the most simple way for me to show you what they do and why they have improved so much recently is to show you the investor presentation, Napco. You will understand what I mean. Investor events and presentations, because the business model may seem a little bit complex now, but everything has improved. No, I think I can show you over there. If I go to investing, FinChat, and I will do this. Basically now the company has developed a recurring business model for the past few years, and it turns out that this business is highly profitable with 90% gross margins. We are talking about a recurring software installation for all the schools, for example, fire alarms. If I go to investor relations, corporate presentation, here we go. Now we will see what I'm talking about. If I can put full screen, that's even better. Where can I put full screen? Is it here? Download. Oh, okay. Oh, you know what? Download, open file. Here. Sorry for checking. Now is good. Let me put this in full screen so you can see what I'm seeing. Okay, this is the investor presentation for the company. They present the they introduce the management, the board, but I want to show you some interesting things. As I told you previously, this is purely a commercial play, no residential play, and they focus on alarms and connectivity, locking, and access control. And they talk about the recurring revenue growth, annual run rate revenue growth. Seems like recurring revenue is a big part of the thesis. Okay, let's continue and see what they do. They focus on all the Internet of Things when it comes to security, and they are in a lot of sectors. I mean, this is school and other public industries. No, that's the size of the market. This is basically what they have for products for security. You have some alarms and connectivity stuff, smoke detectors, cell-based communicators, security touchscreen, sensors, detectors, and if I understand this correctly, they call the firemen instantly when they detect a fire. This is what you pay when you pay recurring fees of, I don't know, $10, $20 per month. In case you are in a school and you have a fire in a school, they call the firemen immediately. And as you may know, in the US you have a lot of security concerns when it comes to school, so I would not be worried if over the coming decade more schools implement stronger security when it comes to intruders or fire, and you will need to improve the infrastructure when it comes to schools or other buildings, public buildings. This is how I see the situation. I'm still analyzing the business, but I've spent a couple of hours on the thesis, and it seems like this is it. Basically, this is it. So they sell. This is a distributor, and they sell the hardware with 20% margins. Okay, and now they sell more and more recurring software with 90% margins. So they gradually shift to this higher margins, more profitable business model. And okay, they have some awards. Napco is a distributor. This is a B2B business, if I have understood correctly. They don't sell directly to schools. They sell to small independent dealers that deal with schools. So they don't do the installation of their software. They just sell their stuff, and small local retailers work with schools. Okay, long-standing partner, robust product portfolio, proven reliability. Yeah, I mean, every company will say this publicly. They focus. I mean, they have an operation called Starlink that has nothing to do with Elon Musk, and this is their backend services. So all the software, all the detectors, and you have this small recurring fee of $10 per month. To, I don't know. Frankly, I don't know yet what they do with the recurring business model. You can, if I understand this correctly, this is a way of always be connected with the cops or with the firemen in case you have a problem. They, for the commercial fire, you see here, it seems like this is a detector that immediately call help for help. But if you know the company, please comment below, and I would be happy to learn more about the company. As I told you, I'm just starting the analysis, and this is a very interesting pick so far. So they have some competition for other industries. As I told you, they have three key segments: the alarms and connectivity. So you have many other alarms companies. You have locking. You have the Nordics companies like Assa Abloy, or you have the US Allegion. They sell locks, smart locks. So this is some competition. And you have access control. I'm not really sure what they mean by access control. Maybe this is just another security play. Okay, let me continue to show you the most interesting part. Here they show their projects. Okay, now this is interesting. I think that this is the most important chart of the most important slide of all the investor presentation. Let me show you what it means. Significant growth in recurring revenue with highly attractive margins. As I told you, they have two parts of their business. The hardware part, 20% margins. The software recurring part, 90% margins. So What is that? Reported recurring revenue. How much of the revenue is recurring? At the beginning in 2017, it was like only 9%. And then it grew. It was 30%, 17%, 23, 30, 32, 35. So this recurring part, is growing a lot. And you know what? It's very profitable. If you look at the gross margins, they started with 75% margins, and then they go up to 80% margins, and they implement and they go up to almost 90% gross margins for this business. That is growing 40%. The CAGR, the compound annual growth rate of this segment, is 40%. Now let me tell you something about the recurring business models. I have seen the same phenomenon of developing a new highly cash generative business model with Amazon and AWS. You may see the same thing with Fair Isaac and FICO with their scores business. And for all the businesses that have two parts, one with low margins, one with high recurring margins, this is exactly the same pattern. They start slowly, and as it grows and grows and grows, it becomes a larger amount of the pie, a larger share of the pie. And their plan for Napco, their long-term target, I don't know what they mean by long-term. Is it 2030? They plan to have half of their revenue coming from this high margins segment. And I will show you later that this has an impact on the margins of the business. This has an impact on the overall profitability for the business. So the business is getting more efficient, growth is accelerating thanks to this highly attractive segment. Let me finish the overview here. They talk about their balance sheet, recurring revenue. Okay, this is the recurring revenue over the past 4 years, and this is the product revenue. Okay, adjusted EBITDA, I don't care about this much. The long-term goals, so that's the long-term goals for them. I mean, they only produce $200 million of revenue. It's not that big. You have other competitors in this space with billions of dollars of revenue, so this is fine. Long-term goals, they plan to have half of their business with high margins, total revenue. What is that? Gross product margins. Yeah, okay. Let me continue. They have one big facility in Dominican Republic where they assemble everything and they send everything back to the US. I think most of the operations are in the US. Okay, very well. Maybe in the investor presentation they talk about the tailwinds they will have for schools. Let me check. No crime intrusion. No, what is that? Healthcare. No, they don't talk about their growth opportunities. Yes, they talk about their growth opportunities. Look at this. Where can I put my face? Large and growing markets with significant white space. You see that they focus on commercial security. This is their big market. School security growing fast, and residential security. That's fine. That is growing okay, and that's 20% of the revenue. So basically the story is very simple. They will implement their hardware and implement their recurring software stuff on all the commercial buildings and the schools. Everywhere where you have the hardware, they will push, and this is what they have done in the past. They will push to implement these software recurring business models. And when it comes to security, recurring software, this is a very sticky product. In other words, this can be a moat for this business. Napco can have a competitive advantage by the stickiness of their recurring software. And all the cybersecurity companies are the same. It's very hard to change between cybersecurity providers. When you have one, you have all your data with one, you don't change, you have an opportunity cost of changing, it can screw up all your data. So normally people don't change their cybersecurity provider. I believe you have the same kind of moat for Napco. Correct me if I'm correct. I mean, I'm still in the learning phase, but it seems like this software recurring stuff is very sticky. And once a school has implemented a Napco software, they are unlikely to change. I mean, come on, guys, it's $10 per month. You don't really care. It's not a price thing. It's a quality thing. You want to call the cops as fast as possible. You want to call the firefighters as fast as possible. And seems like they are doing it because the recurring revenue is going up and up and up. So more clients are coming, more and more clients. And actually, you can have some amazingly good pricing power. Amazingly good pricing power. I wouldn't be surprised if over the coming years, what do you see, like $8 per month, $13 per month, if these prices double. And I will do some more due diligence to check the price for past years to see if they started with a really, really low price to be aggressive and they increased the price substantially. Similarly to what I have seen with FICO. This is here. This is this company. Oh, FICO. This is in French. FICO score. And if you compare Guru Focus for either Napco or FICO, clearly you see similitudes. Clearly you see similitudes. Let me show you. When I mean FICO is a great business, look at what I mean. Revenue accelerating because everything unlocked in 2018 and they could increase the price of their software scores business. Net income, same thing, accelerating. Free cash flow, same thing. Efficiency, same thing. And they do buybacks. For Napco, I have the same pattern. Everything is accelerating. Revenue, net income, a lot of cash, ROIC, you don't have debt, and the free cash flow is accelerating and without the buyback. So I see a lot of similitudes between FICO and Napco for the moment. Let's see where it goes, but yeah, I wouldn't be surprised if they increase their prices. FICO increases their price for 20%, 30%, and that's fine. They can double their price and people will still buy. I'm afraid that for Napco we will have the same phenomenon. Whether the commercial Fire, whether the cellular for Fire is $20 per month or $30 per month, we don't care at all. We will pay to call the cops, to call the firemen. I have to check the competition to see if they have similar prices, so I will keep you updated. I want to share with you something. By the way, if you're looking for a complete framework to analyze stocks and build a strong portfolio, I have a coaching program. More on that at the end of the video. I want to share with you something on Stock Unlock. Let me check NSSC. And I want to compare the margins, the ROIC for Napco and FICO. But first, let's start with Napco. Because as I told you, the recurring high margin business segment was growing and growing and growing since at least 2017. So as this high margins business is growing, the overall margins for the business are improving. And if you look at the gross margins, you see that it is going in one direction since they implemented the recurring business model, up. And actually in 2008, 2009, the company completely collapsed. I still have to check what happened over there. The company went unprofitable for 1 year or two here. And since then, everything went well. And I have an article here, if you want to continue your analysis on your own, on VIC here, Napco Security. An article was written about the company in 2011, talking about their future projects for the company. And it seems like they executed as planned, and the margins went up accordingly. And since the share of the pie of the recurring high margin business grew a lot, double digits, the global margins improved. So you have gross margins at 30% and then 40%, and now we are at 50%. And if you look at the other margins, they follow exactly the same pattern. If you look at the EBIT margins, same pattern. If you look at the net margins, same pattern. We are talking about a company that had a net margin of 5%, and now we're talking about like 25%. And same thing for the ROIC. ROIC, look at this. Up and up and up and up, exactly like FICO. So this is really good. I like it a lot. And if I compare this to Fair Isaac, FICO with the same growing, recurring segment, you see that we exactly follow the same trend of being stable for the ROIC, and then once it kicks in, boom, you increase and increase and increase, and you have a long runway. Same thing for the margins. You have the same phenomenon. The margins follow each other and they increase approximately at the same time. So that's it. So you may say, why invest in Napco when you have FICO? And let me show you something else. Let me show you the price for this business. Look at this. You have NSSC Napco with a PE ratio of 25 compared to FICO with a PE ratio of, hold your breath, of 100. Oh, okay, that's a difference. So I see a lot of similitudes. This is not the same industry, but I see a lot of similitudes when it comes to the business model, the margins, etc. The same path, the same clear plan, and the PE ratio is not the same at all. FICO, I mean, you have some differences. FICO is in a complete monopoly. This is a long runway. They made a profit even in 2008, so that's fine. And nobody can disrupt FICO, basically. You have a monopoly and you pay up for this one. For Napco, I don't know if they are in a monopoly, duopoly. I don't know about this market. It seems like the commercial market is very fragmented, so nobody knows, but that's a distributor, and I will have to look at this. I want to see what changed in 2008 that the company became profitable. And Napco is famous for having a bad reputation of manipulating accounting. So that's very strange, and the company was attacked by some short sellers. If I tap Napco, short sellers, respond to short sellers. If you look at the stock price, Napco, stock. If you look at the stock price, you see that it goes up and everything is improving since 2008. Okay. In 2023, the stock collapsed by 50%. Cut in half. Wow, because of a short attack. And now in September 2024, it crashed 40%. Now we are again back for down 40%. So short attack. If you want, I won't explain what happened in this video. It would be too long a video. But there was some accounting, how they say it, not fraud, but restatement all year long, and the cost of goods sold may have been higher than expected during the pandemic era with supply chain issues, and seems like they boosted a little bit the recurring revenue side of the business, like they upped the number a little bit. But you know what? Even if the revenue is overstated by 30%, the story has not changed. The business is the same. So how did Napco react? They hired a new auditor, or they hired the Deloitte. Let me check. Napco responds to short seller report. Fuzzy pandas, misleading. Yeah, this will be a fight. I mean, any short seller. So we will know the answer of this attack in a few months. The short seller previously made similar allegation in a letter. Okay, quarterly dividend. I want to check what did they do. Napco hired an experienced financial services professional with audit and financial controls expertise. We have implemented quarterly review and reconciliation immediately. And they don't mention the new auditor, but they took immediate action after the short report. So I like it. The company was attacked, saying, guys, your numbers are wrong, and they immediately said, you know what, we will hire an independent expert, and we will do the works because our numbers are good. Maybe we will see some shady stuff, I don't know at all, but this is quite a honest move to hire an independent auditor. Compare this situation with SMCI, Super Micro, that was attacked. SMCI. It was attacked and they did nothing. The auditors left the company and the company was destroyed without any confidence. in the market, in the management, because the management did nothing. They delayed the annual reports. It was a complete mess and a lack of trust, honesty from super micro management. So they delayed stuff. No, for Napco, they immediately hired new auditors, said this is completely wrong for this and this and this reason. So maybe they will be wrong, maybe they will be right. I don't know, I have to continue the due diligence on this one, but what I see is really interesting, and right now the PE ratio for the company is 5. I love the story about recurring business, recurring segment, high margins, because I know it works. And I know that it has a strong pricing power. So if you check the Guru Focus website, you will most likely like what you see. You will see improving stuff. What will they do with the cash? I don't know much. They have what, $100 million of cash with a market cap of $1 billion. So yeah, approximately 10% of the market cap is in cash. I hope they do some buybacks. They can take a little bit of debt and do some buybacks. That would boost the shareholders' returns like crazy. But yeah, you want to invest in these businesses when there is uncertainty, when there is risk. Similarly to 2023, when nobody wanted to touch the stock. If you look at the PE ratio for 2023, we reached a valuation here with a P of 19 for a good business, growing, etc. Even if you have a restatement of 30% of lower revenue, this is still a fine business. And now we have a P of 25. So yeah, I will take a look at this one, a deeper look at this one. And if you happen to know the company, I welcome your views in the comment section below. If you like this content, I have an investing coaching program. In this program, you will learn a complete investing process. You will learn how to find good stock ideas, how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio with great companies. Additionally, in this coaching program, you will have access to my personalized guidance for long-term results. We will do weekly calls where we analyze stocks together, and you will have access to my private number available 24/7 for full support. If you have any questions, I'm here to help. Click the first link in the description below to get more information. You will get a video, a short video that explains how everything works completely for free. No need for your mail address. Just click the first link in the description and I'll see you on the other side. By the way, if you're looking for a complete framework to analyze stocks and build a strong portfolio, I have a coaching program. More on that at the end of the video.